Welcome to Targets in Focus, brought to you by the TV team. Today we'll be looking at dollar CAD, pound dollar and euro yen. Geoffrey Yu, senior FX strategist at UBS, joins me on the line. The Canadian dollar declined for a fifth time in 6 days against the dollar as San Francisco Fed President John Williams said the central bank could begin slowing its $85 billion monthly bond buying program as early as this summer. With this in mind, what are your short and long-term forecasts for the dollar CAD?
Our short-term forecasts are for 102, so we do think that dollar CAD is going to trade around current ranges. Our one-year forecast is for 103, but there are clear upside risks here. Notwithstanding what's going on in the US right now, we think the Bank of Canada is going to start turning more dovish given its internal pressures, especially after Carney leaves. At this trajectory, I could actually see dollar CAD heading towards 105 or even beyond towards year-end, but that will be a domestically driven Canadian fundamentals view rather than a US view.
And the sterling also fell against the dollar, extending a weekly decline on the news that the Federal Reserve may be edging closer to ending stimulus. So with this in mind, what are your forecasts for pound dollar?
Well, we have a very aggressive downside view on sterling. We think that it will hit 141 on a 12-month basis. Again, even though the UK economy has probably surprised to the upside of late, fundamentals are still quite weak at this point. So we do see a move below 150, driven by stronger US outturns both on the policy side and on the data side. Whereas when Carney comes in with a more assertive mandate and remit, there's a chance that QE may be ramped up again, especially in response to the deteriorating outlook for inflation.
Geoffrey, if the Fed does ease off QE, will this be good for the dollar?
This will absolutely be a good thing for the dollar. I think it's going to be one of the pivotal events that we've had over the last few years or so, because it will mark a material change in Fed policy and acknowledgement that the US economy is now not fully healed, but definitely on a sustainable trajectory towards that destination. So it would be beneficial for investors, with long dollar views right now, and I think it'll be a good sign for equity markets if they can actually accept a stronger dollar as well. Though for other economies, especially in emerging markets, which will suffer from the lack of inflows into their own economies, could not be a good thing, but we'll wait and see.
Today, the yen was lower against the euro. Why do you think this was, and what are your forecasts for the euro-yen pairing?
Well, euro-yen, I think will hold around current levels above 130, maybe some slight upside risk in the short term, but overall, we've had some comments from RBA stressing that structural reforms are probably coming soon. It's not much of a yen story, to be honest, right now. There are concerns over volatility in the JGB market, but other than that, I think if people want to be long risk, euro is defined as a risk currency right now, so that's where the flows are heading. But overall, we don't see too much upside in euro yen because I think fundamentally euro is going to continue to underperform.
That's all for now, but do check out other exclusive interviews and press reviews from the TV team. Have a great weekend and goodbye for now.